I will. I'm recording this, so I'll put out the link later. All right. So this evening, I'm just gonna go over some analysis. Anybody got any questions they can ask? So it'll be a little bit of some stocks, crypto, even some forex pairs. I'm be using a technique. Normally, we call this mapping. So it's gonna be like a mapping. So already, I'm looking at banking stocks. So if Trump wins, you want to look at the banking sector. But even if he lose, um, we may get some downside pressure as well. But what we're going to do is we're going to go back and we're going to look at a couple of articles from 2016. So when we do mapping, we definitely want to basically go back into time and study the behaviors of asset classes during those times. All right. Hold on, guys. All right, sorry about that. All right, so essentially, like I said, with mapping, we want to go back. We want to look at the behaviors of assets during that particular time. And so it's a lot of ways you can do mapping. So, for instance, you can look at analysts. So a lot of analysts give these recommendations for buy and sell. Well, the problem is a lot of people don't go back and test out those analysts and see whether or not they were correct. You can do this across the board. You can go on YouTube. You can look at people's comments. You can look at influencers. You can listen to what they said, and you can go back in the time and you can say, okay, well, how did price react during the time that they recommended? And what you start seeing is an emerging pattern. Uh, Now, the pattern is going to be depend on, you know, what emerges. But so I can't say off rip that. Well, if somebody say buy Bitcoin, uh, automatically Bitcoin is going to go down in price. I can't say that. But what I can do is I can say, well, every time this person mentions this, I can go and study the behavior of that particular asset. And once you study the behavior of it, you start noticing trends. And then that's part of your mapping. So then we can sort of predict or have a higher probability of what could occur in the future. And so, of course, we're going to look at a few stocks that like right here, they got some on here from Yahoo Finance. So if Harris wins, all right, we got some of these particular stocks that we can look at, or industries, so to speak, such as renewable energy, solar. We got Rivian, which is with autonomous vehicles uh, in competition with Tesla. So we'll look at some of those as well. And if you know of any industries that we'd have, that you just know about, of course, we can look at those as well too. Also, with mapping, we want to look and see how the dollar or the index, and also safe haven assets such as gold and silver, how do they behave around the election year? All right, so let's go and look at this article is from 2016. All right, so it talks about with Trump's victory, it's a whole new day for banks. So already too this year they believe that banks can very well benefit from Trump, winning. But this is 2017 with this article. All right, and then it talks about how investors are betting that the industry will perhaps be the biggest beneficiary of the Trump administration, where regulations are bound to be eased, where billions or even trillions of new infrastructure spending will be new opportunities. All right. So we're gonna go back in the time, and first let's go back to this list. So let's look at J.P. Morgan, which is the first one on the list. So we're gonna go look at JPM, and I'm gonna go on the weekly chart. And if you want, you can always just talk in the mic because I probably won't be checking in and out on the chat like that. Let me remove some of these. I had did analysis on this earlier today, so I'm just removing everything. All right, so this is a weekly chart, and we're gonna go back to 2016. I'm gonna go to November. So this is where we're looking. Let's go on a bigger screen. Here we go. So we're looking at this area right here. All right. So week prior, we had a red candle on J.P. Morgan, and then when the election week, once Trump was elected, this thing exploded. So the reason why I want to look at the weekly is because the weekly it helps uh, it helps to really drown out the noise. So we're really zoomed out. So it looks smoother. All right. If we're going on a lower time frames, probably it could be some choppiness in here. I mean, we may see some strong candles, but for the most part, this looks very smooth. Right. It looks like you out of the clear. The reason why we want to do this is because this is what I want to show you guys. If we go back and let's do a bar replay on this, all right, we're gonna notice that. Let's go back to here. All right, so let's act like we're back in time, and we're gonna do the same thing today. All right, so we got a clear resistance point right here. All right, and we can see exactly where our moving averages. We're above all three moving averages. That gives us a bullish uh, bias. All right, we got this nice um, bullish tail bar, pin bar. All right, so that means something huge came in and pushed this back up. So we're gonna measure this whole thing, and we're gonna get our extension points. So this is how we're playing this, and it's the same way we're gonna play for all the other stocks for tomorrow or the rest of the week. We're not the goal. So this week, I don't even know if I'm gonna trade this week. I just want to see how things play out. So I don't know who's gonna win tomorrow. So it is what it is. But I'm just gonna stay on the sideline. I'm just gonna see things for what they are, and I'll let it establish itself. But I know immediately right now, if I know that if Trump wins, I'm expecting price to what? Break this area, close above, and we're going to the upside. We already got our levels. So if this is me back then, this is what I'm looking at. All right, that's level 1 and 2. We got level 3. All right, let's go up further. And then we got level 4 or 5. All right. So this is what I would be looking at if I'm trading this. Go back to a bigger screen. All right. And it's just based off the Fibonacci extension, based off of this, right? Stretch this out. Uh, Now, we got to have a bias for the downside, too. All right. So remember, that was my resistance. I gotta get a support level. So I'll be looking for, if price breaks and close below here, I'll be looking for downside targets. All right. In order for me to get those downside targets, I use my Fibonacci again. But this time I'm using the retracement tool. All right. This lines up with Confluence. What we learned in trading is 23% retracement level. If it breaks, I want to go down to the 61%. So this would be my first target area. If at this time, who was this? This was who did Trump beat then? Was it Hillary Clinton, I believe? I think so. I can't remember. But anyway, um,
Yeah, Hillary.
yeah, okay. So if Hillary would have won, banking probably would have got destroyed. So this would be our first area that I'd be looking for to the downside. So what you're gonna see with the strategies that it's so in football, defense is a reactionary unit. You like, okay, we may have a plan of what we want to do, but for the most part, we have to read and react. So whatever the offense does, we have to react in real time. The offense literally knows where they're going and what they're trying to do. We don't know, so we got to react. So trading is the same thing. It's like it's really reactionary. I don't know what the market's going to do, but if you do this, meaning that if you break here, I'm coming
Mm-hmm.
here. If you break here, I'm going. I'm going there, and that's it. What inexperienced people do is they just start picking a position where they want to go in the middle of nowhere. I can't do. I mean, you can get lucky here, or if you want to go long here, you get lucky, then you do it. But eventually, you run out of real estate because it's not going to work, and the markets can chop you up, eat you up, right?
Mm-hmm.
It's no different over here. Watch this. We get a what? We get a breakout, but then it did not close above on that level. So it's a whole lot of buyers that came in the market over here, and then they just got crushed. Just got crushed. Because why? You got certain trading strategies to tell you as soon as it breaks out, just go long. Well, they just got ate up. So that's why we want to be a little bit more on the reactionary side. Give it time. Don't have to rush. So that's why we're on a weekly. All right, so let's hit the play button. Let's see what's going to happen. All right, stop. Now, it looked like you missed it, right? You're like, hey, it
Mm-hmm.
closed above. We missed it. And here's the key thing. We're on a weekly, but we can go down to the daily. When you go down to the daily, now you can find some better entries. I'm not going to enter based off the weekly. I definitely will go down probably to the 4 hour chart. I will find entry on that. So even though I'm waiting and I see this, it's not like I missed out. Now, if you want to stick on the weekly chart, then this is what you would look at. You would then draw another level. You can't see it because this thing is blocking it. So let me move this up a little. Let's move this up. All right. So this candle right here, what another trader would do is this. They're not going to go long until this candle is engulfed, which it gets engulfed right here. Now they're long. Where would their stop loss go? Below the candle that got engulfed. All right. Now watch this. For other traders who got this and they found other entries points, your stop loss is going to go below the candle that got engulfed here. Okay. Now, even back over here, if we want to play this game, if you just want to do a breakout for whatever reason and it didn't close above and it came back against you, your stop loss is right there. Why? Because this candle almost engulfed this one, but then it failed and it came back. So if you enter, your stop loss is right there below. So we were reducing it to just candles. Now, keep in mind, this is a weekly candle, so it's much larger than what it appears. It's a lot of movement on this. But If I'm in this trade, my stop loss is either right below here or below there. All right. So we're in the trade. Cool. Targets 1 and 2 have been hit. Let's pause right quick. What did we just see? Classic what? So look, this is demand zone. Price broke out, came back into the demand zone. All right, how do we play demand zones? So most people automatically assume that you're supposed to enter when price comes back into the demand zone. You can, but the safest way is to wait for whatever bar gets into the demand zone. You then look for an engulfing bar to engulf the bar that came in. This red candle came in, this green engulf. What are we doing? We're going long, and you're putting your stop loss below the counter that was engulfed. Now, what I'm showing you now is this is somebody who's came into the game late. They didn't get this move. This is their second move. We're like, Eric, well, where did they get out at? You go back to recent market structure. In the trade right here, stop loss below here. Look left, we're out here. You about Eric? What about the other targets up top? Yeah, if we're long term, but here's the thing, guys. I'm not holding no trade for no years. I mean, right here we're already in July 2017. I mean, this one over here is November 2016. By the time we get up here, this is going to be a year later. I'm not holding it. But what I'm showing you is that I can scalp, I can swing scalp. All right, swing scalp is similar to scalping on a lower time frame. You in and out, but this is swinging, meaning I can make more money. I could be safer, and I got time time on my hands. Now, I guess somebody can take out a leaps contracts for options. I don't really do leaps like that, but some of you may be good at that. So you can look into that, right? But what I'm saying is that you can find opportunities about, oh, this is back in the demand zone. So watch this. This breaks out. This is still November, this December. All right, we get up here, we hit a high by February 2017. And then by May of that year, it finally comes back. So this means this is a trader that is very patient, meaning it had to wait 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks for price to come back here. And then they got it. And then what do they do? Nothing until what? Price engulfs.
Mhm.
And that's it. And they keep it moving. Keep going. Targets 3 and 4 have been achieved. Remember, I told you about years. Now we're in July 2018. We basically almost 2 years out. We're in September 2000, October 2018, November 2018. Now we take a massive drop. We need to see if the price could get back to this area. That would be nice if it do. All right. Targets 4 hit. Targets 5 hit. So based off of that, we're done. And boom, we did. Remember, I wish we could get back this area. We did. This is a key zone. But look, it took March 20. So this is the pandemic right here to push price back down to this level. So you see those targets are hit based off of that impulse. And so now we need to do a new impulse. So I'm gonna go ahead and go back into real time. And then we need to see because now I can measure this whole entire thing right here. But what I'm gonna do first is I'm gonna just measure this part so you can see exactly how this extension still has played out already. So this is what targets 1 and 2 right here. Targets 1 and 2 have been achieved based off of this impulse. So if let's do this over again. If Trump were to win tomorrow, we have what? Resistance that's setting up just like we did in 2016. And we got that level. So let me take this off so it don't look cluttered. So what are we doing? Nothing. If he lose, we so look, let's go ahead and measure this. We got here to here. And make sure y'all ask questions if you got any questions, right? All right. If he lose, we'll see all this level to break. More importantly, I want to see it 23% broke. And I want to take it back down to the 61% safety wise. And this is the zone I want to see if he lose. So I got a target for he lose. All right, take this off. Let's do this. And if he win, we got those what? Upside targets. We know the next one is going to be $252. What is this? JP Morgan.
Mm-hmm.
And a 310 up at the top of that. And 340. We're just going to do this whole zone. This is where we want to see price get to. That he can push up there. So essentially, this is what we're looking at. And if he don't go down here. So the beauty of this type of strategy is that you got your either or. Now, what can mess this up? Trying to find a side. All right, here we go. Yeah. All right, so look at this whole structure right here. I mean, it's moving, but it's a whole lot of that's a lot of sideways. It's like it's not doing too much. Even though we're on a weekly, I mean, some things transpiring, but it's like it's inching up, but it's staying in this range. So if you take this range from 2013, this range it left this range essentially. This is 3 years, guys. This thing range bound for 3 years, but there was no major catalyst during that time. So what I'm getting to is that, excuse me, we're in an election year. Some things need catalysts. They need a reason. The biggest players in the world, they have a little bit more patience. They can wait for things to play out. If y'all seen before, I had already did an analysis a long time ago on oil and how oil it took almost 7 or 8 years for one of its plays to play out. They have the time. This would be the only thing that would make these alternatives, the third alternative, it just goes sideways. It really it's not coming down here. It's not really going strong. It just sideways. It inch up a little bit. It teases people. It's not doing anything, and then it has a catastrophic. I don't believe it'll do that because, like I said, we're in an election year, and the one that we just looked at, we wasn't in an election year, so there was really no catalyst behind it. So now we may be in a catalyst-based environment. All right, let's look at Bank of America. And remember, if you got a question, just unmute. All right, so let's go back 2016 again. Same thing. See us doing the same thing. Same type move. Elections. It took off. So where we currently are right now, it's the same, almost the same setups, right? Now watch this. There's a lot of look at these candles. They're telling some sell pressure is coming in right here. Sell pressure, sell pressure, sell pressure, sell pressure. It's a lot of sellers coming in here. Let me check something out. Um, all right. So far, I'm looking at the call volume. I just want to see what the options volume was. So it's 85,000, 457 versus 53,378 puts on Bank of America. So there could be a lot of sellers in this area. If that's the case, they could become liquidity. So remember, if somebody is buying, if a lot of people are selling, that's good for somebody who wants to buy. So this could be. I'm not saying it could be a liquidity trap. It's something to think about. So once again, if old boy wins, boom, we're going to upside. If we lose, coming down to the downside. So we don't really have to go and do the same type of analysis. It's going to be about the same because all the banking stocks are somewhat similar. We'll look at one more. We move on to something else. Look at Wells Fargo, but they pretty much going to all have the same setup. Yep. This is November election week. Same thing. Now, this one got. Let me see. Yeah, this one struggled a little bit. Of course, we know Wells Fargo had a lot of scandals too. So that's that. But upside targets. These would be the upside targets for this. Like I said, and these would be plays I would never buy the stock outright. I would play options on it if that's the case. All right. Let's look at Bitcoin during the same time frame. So we look at 2016. All right. So uh, right here. So this is election. Uh, it was really a whipsaw. Had a drop.